Good morning everyone and welcome to the AIB Technology Funding for Growth event. My name is Don Harrington, part of the Goodbody team recently acquired by AIB. Our corporate advisory team in Dublin and London advises high growth companies on capital raising, mergers and acquisitions and going public on the stock market. Today we're delighted to have two high growth companies, Fenergo and AIB, and also Atlantic Bridge, one of Ireland's most experienced venture capitalists investing in technology companies in Ireland and internationally. Today, if you are tweeting, it would be great if you could use the hashtag backed by AIB for your tweets. And before we kick off, I'd like to hand over to Kathy Bryce, Managing Director Capital Markets at AIB. Over to you, Kathy.
Thank you, Don. You're all very welcome to our event today, and sincerely thank you for taking the time out to join us. As you know well, technology is a high growth sector in Ireland and globally. We have an extremely dynamic and diverse tech sector, which contributes greatly to our economic growth. The dramatic changes forced upon us by COVID have demonstrated clearly that Ireland's tech sector is key to every aspect of economic and social life. The COVID lockdowns, with the rapid switch to remote working, video calls, virtual healthcare, have accelerated the adoption of tech by, some would say, up to 5 years. And digital transformation is now a key business strategy for all industry sectors. Ireland has a strong entrepreneurial culture, and we have many innovative tech startups, such as AIB, who is on our panel here today, and an increasing number of Irish tech companies have grown from startups to become global leaders in their market. A great example of this is Fenergo, who we are delighted to have join us today. Funding for growth is the theme of our panel discussion this morning. And as you know, access to funding is critical to fund the startup and growth of tech companies. Investment in VC funds continues to be a key part of our strategy, and we are now the largest bank equity investor with over 250 million committed to VC and private equity funds. We are delighted to have one of these funds on the panel today, Elaine Coughlin, Managing Director of Atlantic Bridge. The tech sector is and will continue to be a priority sector for AIB, driven through our Goodbody team, our fund investments, and then as companies mature, providing debt funding. So with that said, I'm really looking forward to an engaging discussion this morning, and I will now hand back to Don Harrington. Thank you.
Thank you, Kathy. And before we kick off our first session with Niall Toomey, CTO and co-founder of Fenergo, let's watch a short video clip about Fenergo.
Fenergo is the #1 provider of digital client lifecycle and journey management technologies in the world. Here's why. We enable financial institutions to digitally transform their end-to-end client lifecycle processes and deliver a truly frictionless customer experience. Fenergo Client Lifecycle Management digitally orchestrates customer journeys through every aspect of the client lifecycle.
Well, that's just a short snapshot of the success story that is Fenergo. Niall, as I said, great to have you here today. Did you ever think that you today would be the CTO, when in the early days of Fenergo, you'd be the CTO of a global RegTech unicorn?
I think if you said RegTech and unicorn to us, we would know what you were talking about in the early days, to be honest. We were ambitious, probably naively ambitious, and it is back to 2009 when we started, but it was a totally different space.
Yeah.
My background was working in financial services for large investment funds, consulting into them. Mm-hmm. We knew there was a space there. The middle office, the front middle office, back office is really inefficient is our feeling. We really wanted to do something, but it was actually lending. So we had come from the late 2000s when it was all about credit, it was all about mortgages, and we'd been doing bespoke systems and we
pushing out more money.
Push out more money, get the money out the door as fast as possible. How do you make that as efficient? So that's what we'd been building systems, and we said, look, there's something here. We're doing the same problem over and over again. But we got to market too late, really. So in 2009, we knew that we weren't blind. We knew there was something going on in terms of a global financial recession, but we thought, okay, demand might have tapered down. We didn't realize to what extent it had tapered down. So, we hit the market, and it was very clear feedback is, this is not where there's a budget. This is not where financial services need to be spending money. And it was a moment we were looking at ourselves saying, okay, have we backed the wrong horse? What do we do? So back then, if you talked to me back then, would I be where we are now? Absolutely not. It was very much a big moment where, again, we didn't know the term back then, pivot. We really had to pivot, and we had to pivot fast. And it's interesting, when we're talking to the financial institutions, they were saying, well, actually, it's regulations we're working on. It's anti-money laundering we're working on. The regulators coming down hard on us.
The tone shifted.
Completely. Yeah. And then after 4 or 5 meetings, we're thinking, well, actually, why don't we solve that problem than the problem we're solving? So a big pivot. And you think of back then, there was only a couple of us, you know, trying to hustle, trying to get money, trying to get customers to now we're 900 people plus. We're global, all the main financial service centres around the world. And we very much are a global first company. You know, our focus is anywhere around the world that you have that problem, that's where we tackle.
Yeah, so that ambition level, like my experience of many Irish tech companies is that for their initial reference customer base, they're playing in a pool that's the UK and Ireland. That's what they focus on, that's where they try and do it. Fenergo went to the US early on, so what drove that early and important decision?
Necessity. So we got bits of work in Ireland and the UK at the beginning, but the feedback was very much in the Irish market was, so we pivoted into regulation technology. It was like, yeah, it's a need, but there's no budget. You know, there was very much clear feedback is, this is about managing currently bad debt. You know, there was potential workforce layoffs. It wasn't about digital transformation. It wasn't about implementing new systems. So the budget wasn't there in the Irish market. It's bits and pieces of work, but not a huge amount. Went to the UK market, different market, but they were, you know, survived the housing crisis better than us, very in terms of the collapse, etc., the property market. But they were looking at us saying, well, where are your reference customers? Show us the capital on your balance sheet. You know, come back to us when you're more established. And you know, again, we were looking at ourselves at a moment saying, well, what do we do here? We go to America, which is kind of like, well, you know, it really is. But America is going to be even more difficult was the initial kind of, you know, assumption. But it was actually it was the opposite. We found a lot of early adopter financial institutions.
Okay. So the risk appetite was different.
It was there. They had the pressure. It was Dodd-Frank. It was FATCA type regulations coming out. They had the pressure. They knew that there wasn't established you know, technology companies out there that are willing to solve it. They loved our vision, they loved who we were, and they were almost backing us like VCs. We're going to back you. So they were very much, you know,
they were funding your development.
They were funding our development. They were introducing us to other financial institutions. They wanted us to have not just them, multiple financial institutions that, you know, it's a true product company and that we're going to survive the journey. And also they were very much, you know, it's quid pro quo, you know, in terms of if we're going to back you, you're going to build a product that we need. So it's kind of going hand in hand as an early adopter, giving us the feedback, but a different mentality, definitely very much willing to adapt to, you know, champion as an early adopter a startup company and try and make them succeed very much. But they got what they wanted back from it. They got the technology they needed to be safe and compliant.
Okay, so in addition to that, early support from those more risk-embracing customers in the US. You also had the input and the experience of some of the founders from Norcom, another Irish success story in the financial services kind of reg tech area. So how important was that, or how for you as a team and the company in the early days?
It's probably a lesson, you know, it's not just about the money you get it into, you're getting the money from is really important. People like Norcom had went on a very similar journey, and they just recently exited their journey in terms of a sale. For them, there was much about coaching us. You know, they'd been through a very similar journey. I mean, I was mentored by the former CTO, which was great. They could almost see 5 years ahead of where we need to be, how we need to manage cash. One of the big things they said to us at the time was like, show us the Gartner, you know, 4 quadrant. Where do you sit in it? Well, actually, it didn't exist. The terms didn't exist. You know, what we were doing is client lifecycle management. None of that existed. Well, if it doesn't exist, create it. You know, very much. Create the terms that the industry is going to use, get that, you know, Gartner report out, be on it, but also almost write the RFPs for yourself. If you've got an opportunity here to shape the industry and the language used in the industry, and that was a big learning point for us, you know, having the confidence to go and do that. And, you know, and 2 years later, we were seeing RFPs coming in, using our terminology, using the way we were describing the business problem, because it just didn't exist. You know, people knew it as a problem, but they hadn't put proper words to it. And then the other thing, they would have shaped us up in terms of, look, what's your license to professional services mix? How do you manage cash from your professional services that can fund product development? How do you look at your licensing model in terms of, you can get a one-time payment for your software, or you can get recurring payment for your software, guess what? Recurring payment is better. One-time payment's great because it puts money in your bank account and helps pay the wages, but recurring is actually where you build long-term value in the company.
Yeah, because they did a pivot as well, and they also went public, so they had that experience to help. Your growth in the last 5 years has been pretty significant. What are the key success factors do you ascribe to that growth over those years?
Yeah, so I mean, 5 or 6 years ago, we were at the point where we had, a brand in the marketplace. Mm-hmm. We had very much set the tone in terms of what this business problem was and put the words against it. And so when people thought of the business problem, they thought of Fenergo globally. Yeah. Even if they weren't working with us, they thought of Fenergo. We had set so that work had really paid off in terms of foundation. We'd recently taken on more capital as part of a private equity investment. So having the capital to expand, we went from like 150 people to 600 or 700 people across that time frame. But I'd say the big thing is having, at that point, a great product and great people. Like, it was still a startup, and we still are today a startup type mentality.
What were the key prep points to bring in on that fund, to get yourself ready for growth venture, early stage, private equity at that stage?
Yeah, a couple of things. Look, when they invest in you, it's the team. Do you have the right team around you? They really do look at that in terms of who they're investing with. And also, we've been prepped with the likes of Paul Curley and Norcon crew in terms of how do they value you? What do they value when they look at the financials, when they look at how you're doing product development? And that doesn't mean that you're sitting down every day saying, we're going to sell or exit in a year's time. How are we going to? It's not about that at all. Is that, look, if you're going to run your business, there's key metrics that you're going to be evaluated on when it comes to funding rounds or it comes to exits. Well, you should be running your business with those metrics in mind. So the recurring revenue, as I mentioned, the professional services, product mix, they're the type of things that we're prepared. So when they look in at us, it was almost like we'd investor pack ready to go, because that's how we're running the business in terms of our day to day and the metrics that we cared about. Very much in terms of just making sure that we're ready. And the other thing is, the interesting I've learned from investors is they'll ask a former employee, what's it like to work with, and they'll ask a client. It's a very quick way of doing due diligence.
Quick diligence,
it's very good. You don't have to go in, you got to look at, like, if you ask and you get the feedback from that. So how are you treating your employees? How are you treating your employees when they're exiting? But also, what would a client say about you? It's a key part, being client focused all the way through that journey.
You now have big European private equity investors in Astorg and Bridgepoint on board, and they're looking forward over the next 5 years or so. So what's going to drive the business over the next 5 years, and where do you expect to be at that time?
Yeah, it's look, the space, even without any change, the space we're working in, there's a huge opportunity. Just the digitization of what we're doing in the front, middle, and back office, expanding to new geographic areas. South America, Latin America, we really haven't hit there the way we can, as well as our current markets. So there's huge organic growth opportunity within the current markets, but I'd say we want to become a multi-product company. So we're looking at acquisitions. So today it's almost like pre-transaction, are they safe to start transacting with a financial institution? But actually when they start transacting and trading with financial institutions, are they continuing to be safe? Are they doing money laundering activities? So there's definitely an opportunity there that we would see of bringing the two sides of that equation together, and we're actively looking at companies to buy or build ourselves in terms of an opportunity. And when we go and sell our product to financial institutions, we're actually selling to either the same person that's making that decision, or they're in the office next to the person making the decision around that transaction monitoring piece. And also a big shift to the cloud. The type of data we capture, traditionally financial institutions would have held that on premise. They would have said that's going nowhere. Actually, that's completely shifted. So we've got a SaaS product, which is doing fantastic. It's continuing to grow. That SaaS product is another area in terms of growth.
No, that's great. Fenergo, it's been a fantastic story so far, and I'm sure the next few years are going to be really good. And maybe moving on, we're going to have a short video about Buy Me, and after that we're going to be joined by Elaine Coughlin from Atlantic Bridge, one of the partners, and also Devin Hughes, who's the CEO and a co-founder of Buy Me. Over to the video.
Want to get your full Dunnes Stores grocery shop delivered to your door in as little as 1 hour? With Buy Me, you can. Simply select the items you want in the Buy Me app and place your order. Your personal shopper will contact you from the store to discuss substitutions, so there'll be no surprises. Download the Buy Me app today and get your weekly shop delivered in as little as 1 hour. Plus, get free delivery on your first order.
Well, I hope you enjoyed that short clip on Buy Me. Maybe to get the panel going here, Elaine, first question for you. COVID has been, I think it's fair to say most tech companies have weathered COVID quite well. It's been a boost for all things digital. Tech valuations are at an all-time high, and VCs have exited quite well from tech companies in 2021. What does it mean for investing in new tech companies, and is it a good time to invest in tech companies now?
Thanks, Don. Yeah, no, it's been quite a remarkable year as we think back over the last 18 months from technology from when the pandemic hit. There was certainly a lot of caution in the market, but then it was clear that obviously digital was going to be key, and I think that is why we've obviously seeing huge demand for sectors like digital health, obviously companies with e-commerce, and we're going to hear from Devon from a Buy Me's perspective. So anything, I guess, that is playing into that trend has been really in demand with investors. We've seen record numbers on the stock markets, stock market highs, and obviously the IPO market window is open. What it does mean for new investments, I think, is though investors are becoming discerning or having to become discerning. These things are cycles, and certainly valuations are at a challenging stage now. So they really have to be companies that can have a defensible position, grow over the next couple of years. 22 is going to be, we think, a challenging year. It's difficult to estimate when interest rates are going to go up, or when valuations are going to, whether they're going to continue to increase or fall back. So I think from our perspective on new investments, you know, we are very cautious and sensitive around, is this a company that can, you know, build and scale through what's probably going to be choppy markets over the next, you know, 36 months.
Okay. Devon, like, you're one of those companies that's benefited. Buy Me's had a great run as a large basket same-day grocery delivery service over the last 18 months. You've been a beneficiary of this. In Ireland, technology companies, it's mainly been the B2B software companies that have been raising capital in volume. What's it been like as a consumer technology focused business in this sort of market raising capital, or how have you found it with investors?
Yeah, I mean, you know, building a consumer business in Ireland is no mean feat, and probably one that I didn't fully appreciate when I first started out on the journey. You know, we do great, as I said, we do great SaaS, we do great medtech, and we do some really good hardware companies. But consumer, we're a small island, and we don't have the historic experience, and particularly we don't have the necessarily a mature investor base that understands consumer technology companies. So I think we found it quite challenging in the early days to find our fit. And in the end, I mean, we had to raise capital we've raised every different type of capital, actually, when I think about it. You know, we did friends and family, which I think everyone should do. If you're going to ask a stranger for money, I think you should be willing to have an awkward Christmas. And we did crowdfunding. We did Enterprise Ireland. We did corporate with Unilever. We did angel. We've done VC. We've done every type of capital you can think of, because we had to shake out all the trees, because it just wasn't a clear fit.
And you've had a growing number of customers, you know, good partnership with retailers. What's unique about that, and what have investors and customers found good about that whole model?
Well, I think, you know, the inflection point for us as a business happened pre-COVID. A lot of people, you know, will come up to us now because our brand has established, you know, itself quite strongly over 2020. We became the number one food and drink app in January of 2020. March of 2020. And so now we're a relatively well-known brand, and a lot of people come to me like, "Oh my God, this is a great service. You guys were a lifesaver. You know, I've been using you since you started in 2020." And we've been, you know, operating since 2016. But the real turning point for us was when we signed our first enterprise partnership with Lidl in 2019, and we tripled the business that year. And on average, we've doubled the business year on year. And then COVID obviously was an accelerant. I think the market has shifted quite aggressively, and I was chatting, you know, I've spoken at a number of conferences around long-term consumer behaviour. We've seen 3 years of adoption of online as a channel. It was already the fastest growing channel in grocery pre-COVID. What we saw was 3 years of accelerated adoption in an 18-month period. And now we have seen some contraction as a market with kind of COVID easing off. But the base has ended up at a far higher level than it was pre-COVID. So, you know, we are in a unique position whereby we've been able to scale with that volume effectively. We don't have any vans, we don't own warehouses. You know, we sit on top of the existing store estate and we sweat those assets harder. And we're using a shared infrastructure across all retailers. And so that means there's no lead-in times, there's no heavy capex. And these are the things that our retailers love about the service that we're providing. And then consumers can get, as you said, a full weekly shop in a matter of hours, picked by their own very personal shopper. So you put those two things together, you get a really powerful mix.
Just as you say that, I think about scaling and all the challenges that companies go through. Elaine, just those challenges for scaling a business in Ireland, like what are the key things that companies face in those early days, and how do you think
Devon's
about those?
story there about the start of Buy Me and having to try and source the capital to fund the go-to-market strategy, and I think that's usually the key kind of sticking point. What we find in the Irish market is we have phenomenal entrepreneurs, great technical people, world class, and I think where we struggle as an ecosystem are around things like product management. Having kind of really deep product management skills to really build the product to the needs of the market, and then the actual hand-to-hand market combat in the market, the go-to-market strategy. And that's where you can burn an awful lot of capital, in getting that right. And SaaS businesses in particular, as well as, the deeper tech where the supply, you've got long lead times, long sales cycles, or even Niall in Fenergo with banks until you probably hit a certain scale, getting those first kind of couple of key enterprise deals. And Devon talked about that, one of the key enterprise deals that you got done really helped you, propel the growth. So I would say that scaling piece really around sales, marketing, but even before those critical hires, what is our go-to-market, and testing it and winning some of those leading, teaching customers, for want of a better word, that are going to perfect that, and being able to do that as capital efficiently as possible. And of course the other issue, which Devon spoke about, we're a small island. So just like on consumer, you're absolutely right, it's difficult to build so really phenomenal job by you and the Buy Me team to build a consumer e-commerce business in Ireland. But what we find in deeper tech as well is that we got to get off the island, right? The customers are in the US, they're in Australia, they're in Europe. And again, you need to hire in those markets, and Irish companies need to hire really great talent. And of course, there's a war for talent in those markets, and it's expensive. And even putting cost aside, it's just difficult to find the right people. So that's where having, whether it's a good board, investors, network, Enterprise Ireland, Goodbody, finding those, people, particularly on the go-to-market side of the house, is really where we see Irish companies face the biggest challenges. It's not so much really on the technology side. Fantastic technology and fantastic entrepreneurs.
And Niall, we chatted earlier about the Fenergo story, but yeah, those scaling challenges, do they resonate with you?
It's unbelievable resonation. So we're B2B enterprise, and the product management piece is key. I think for B2B enterprise, if you are going to have somebody that will buy into you and invest in you as an early adopter, well, they could take it down a path where actually it's not a product anymore. Like the discipline of finding the right early adopter who is going to actually take you in a way that it's productized, you can take to multiple customers, and there's no getting away from that. And then you got the type of financial institutions where they're actually willing to be an early adopter. A lot of financial institutions, they're risk adverse.
Yeah.
They're like, well, what's your capital?
Who else have you got?
Who else have you got? Who's my peers that are doing it? Do you have any tier one bank? And you're like, no. And you're
show us
saying
your
no to all
accounts.
that. Yeah, show us your accounts.
We don't want to be first.
It was a big thing. So capital and balance sheet.
I think that's where early stage champions, we were very lucky. I had no reputation in grocery, and grocery is also quite a conservative industry, right? Yeah. Food supply is a serious business. And I think for startups in that early stage, finding great people to join them and great industry leaders to join them early on in the journey is so important. Well, I remember when I first started out, I had no reputation in grocery. No one knew who I was. And people like Eamon Quinn and people like Scott Weaver's Right, the ex-CEO from Morrisons.com, they kind of lent me their reputation. They let me stand on their shoulders, and that kind of gave us credibility. And I would imagine for businesses trying to crack into the fintech and into the financial institution sector, I'd say it's the exact same thing.
It's the same thing.
People who have those relationships
and have the vision, so they got to buy into your vision that you're going to do. So you're right. The people who invest in you and their reputation as actually carries you a lot along the early way.
So taking that reputation point, Elaine, maybe just so when you look at founders who have been successful, they've scaled companies successfully, like what are the common repeating characteristics that you see as a venture capitalist? Because you have a good vision across years and portfolios of companies to see what's good.
I would say, first of all, we love repeat founders, and I'm delighted to say that we have, I'm going to guess, I'd need to do the latest count, but there's probably 15 people that we've just done multiple trips with, and that's a great reflection on them and on us. And what I would say is common amongst all of them is they are phenomenal leaders. You know, they are great leaders of their teams. Their teams follow them as well, so they don't just come themselves, but you know, and they've made money for themselves and their teams and their investors. It was, you know, is equitable an approach where people stay long term. So I think the leadership point, number one. Number two, they've got the drill book. They've lots of scars on their back. You don't make the same mistakes twice. You know, so they tend to be much quicker at getting going, you know, because they don't have to kind of delay over making some key decisions, particularly on the people front and on the leadership front. And then the other thing they're absolutely razor focused on is the market and the customer. And to what Niall said there, you know, the product fit and what the gap is in the market, and that there is a gap in the market for this particular product or problem or challenge, and that they have the solution for it, and intense passion about, you know, the ability for them to win again in that market. And of course they come with much more credibility because they've got that round trip under their belt. So it is easier, you know, to put the round together, to get the band back together almost, and to get going again. And I would say actually, interestingly enough, whilst they're very driven and ambitious, they're probably a little more cautious because they've seen it go wrong. You know, there's been very few companies I've been involved in where it's just gone in one direction. There's been lots of, you know, roller coaster moments. And so they're a little bit more, you know, cautiously approaching the market. But again, I think a really key part of the ecosystem that we have these serial entrepreneurs, because it's just building capacity and competence. And by the way, their management teams around them are learning. So even when I see exits, and I had this conversation with some of the AIB Good Buddy team just there, even when I see exits that are maybe a little bit subscale and you think, gosh, they could have gone further, it's not a bad thing if they go again, you know, because you're building out that capability. They've de-risked themselves financially and their teams, and they're able to go again. And what we really need to see is, it's a bit like, you know, you don't, when you first drive a car, you don't get into, you know, a Tesla. Well, maybe you do, but you know, you don't get into a really fast car, Rolls Royce. You know, they give you a Fiesta or something. It's a bit like that in companies too. It's very hard. It's rare enough that they go from 0 to 10 billion, right? Or a billion, or an IPO. And one of the things we do want to see more of is companies like Fenergo scaling and going further and breaking through that multi-billion barrier. And I think that's where the repeat CEOs, that's their role. They will get there. They mightn't get there in the first outing, but they'll get there in the second or the third.
I think that's one of the biggest myths for startups. I would spend a lot of time going to universities and giving talks, and particularly, like, there's so many entrepreneurial societies now in universities, which didn't exist when I was in college. Yeah. And it's become a thing, and there's a whole subculture in Dublin now and other places in Ireland where entrepreneurship is becoming this kind of way of life, which is really exciting to see. But one of the biggest misconceptions is this sense that you're born that way. Yeah. And like, BuyMe is my 5th business. I've had 4 spectacular little failures that have got me to this point. And I'm very thankful for all of those experiences. I never walked away from anything that I started empty-handed. It was either, you know, a head full of knowledge was what I was getting in most instances. But most people don't understand that it's a muscle. And repetition is what develops that muscle over time. You get better, you get faster. Because I've certainly felt that as I've gone through my own experiences and journey. It's you start facing similar, not the same challenges, but you start facing similar scenarios, and you're like, I've been here before. I know what this looks like. Yeah.
And I think that's key. I think it's resilience. Like, when people invest, they're saying, are you going to be resilient? I remember one of our first early investors were like, this is a long slog in a bog, is the way he described it. He goes, this is like the idea, you gotta have a good idea, but that probably will change. Are you guys going to stick true when it's really tough? And it gets really tough. Like, they know it's going to happen, and they're saying, are you the type of people that are going to put in the 7 days a week, the hours, the travel, whatever it is, to make this happen? And I think that's the key part. I mean, there's clear resilience there, Devin, in terms of going through those different cycles of different companies, etc. But I think it's the key thing they look at for any company is this, are you going to take this seriously, and you're going to really put the effort in?
Just going back to an earlier comment that you made, Elaine, around kind of where new sectors are going, and in my kind of opening point around like e-commerce, net beneficiary, like digitalization of technologies. Fenergo is another beneficiary of that. Video gaming, others. So those sectors have all had great boosts in the last, especially over the last 18 months. Where, like, just looking at the sectors are the changing sectors are the next 3 to 5 years. It's always hard to crystal ball gaze on this, Elaine, but where are you looking to, or if you're looking forward as an investor in this sector, where do you see the big trends and opportunities for tech investing?
Well, I think actually it was just interesting listening to the two lads. Those behaviours, I think, that you're talking about post-COVID, I would say are permanent, you know, so what Devon was talking about, their permanent shift. So businesses like that, I think, are going to do very well. It's not like just a COVID bump. You've got permanent. And on Niall's side, from Fenergo, you know, if you look at any of the top 3 risks, regulation is up there, and you know, AML and KYC and the world we're moving into, and digital. So their market, I think, is only just going to grow because, you know, as more and more of the financial infrastructure is digitized, and the challenges that brings around regulation and compliance. When we look, I mean, we're investing, and I talked about valuations and about being cautious, but we're not really investing for the next 24, 36 months. You know, we are taking that 5-year view. Now, what we do want, though, is to what Niall said, we want those companies to survive choppy, bumpy periods. So I think that's where we say, look, yes, everything is very strong at the moment. Capital, you know, you've got monetary easing on a scale that we've never witnessed, but we've challenges, we've inflation, we've interest rates, we probably have tightening and tapering coming, right? So that'll definitely take a little bit of the froth out of the market. And we don't know what the next crisis is going to be, except we know there's going to be one, right? And we've just had, obviously, a massive, you know, pandemic. So we don't know what that crisis is, but something else. So we're wanting the companies to be, you know, battle prepared for that they'll be able to get through it. But we are taking that 5-year view. And then in terms of the sectors, you know, the things that we're looking at right now, I would think that healthcare and med tech is a very strong sector and is going to continue to be, because of the big macro trends, both, you know, aging populations and obviously coming out of a pandemic. And I would say the digitization hasn't happened to the same extent in health yet, but it's been massively propelled by the pandemic. We're also looking at, I mean, I think we're always looking for entrepreneurs to find problems to really big challenges. And I mean, we have to all acknowledge that climate is obviously the biggest urgent challenge that we've got. So a lot of our companies that we're looking at now through the lens of, well, what is this going to do for, you know, we've a company that we invested in 5 years ago that's doing gallium arsenide chips, right? It's an Irish company, just went public on the NASDAQ. And that hopefully over the next 5-10 years is going to have a big impact. But again, the time cycles are long in terms of reducing, you know, lower power into EV and solar and devices and stuff like that. So we're really interested in that. And then obviously one that we have, and you talked about universities, we have a university fund, and I would share with you what you said, totally agree in terms of the belief and the culture is changing, and we need that. Quantum computing, you know, I think that's obviously a very big space. You know, that is definitely a longer term and company, but you know, investment is very heavily in the space. And then one of the big, I suppose, hot areas at the moment, and we've a couple of plays in the infrastructure side of it, the metaverse. You know, is that going to be the next, you know, web, internet? Certainly, you know, there's huge privacy concerns, but I could tell you that in terms of the underlying infrastructure that's going in to enable that, that's happening. So compute, and then cloud and big data and business intelligence, which is again in both businesses a key part of it. Data, you know, the amount of data that you're capturing and that you're enabling businesses to use real time. So we're still very much focused on that. And then security. I mean, it's another one of the top 3 challenges of our time, and so we've invested quite heavily in security, because we think that's just, unfortunately, that's a problem that's going to be with us for a long time. So again, you're kind of looking at long range, trying to invest and make sure the companies are funded enough to be able to, you know, what Niall said so well, be resilient through it. And, you know, but those are probably 5-year plays, I would say.
And that funding point is important. Like, I'd agree with you. I think we're on the cusp. We're only on the cusp of the next stage because of the digitally enabled population, the processing capability we now have. Yeah. It really is the start.
Cloud,
in
the
my
combination
view.
of
Absolutely.
all of these.
Yeah.
It's almost like tectonic plates colliding, you know, to create. Now, there will be winners, and of course the big challenges in some spaces, and Devon probably sees it, you know, you've got these massive big tech companies which really can kill and capture market share, and so I think that's always a threat, and there's, you know, there's 4 or 5 of them, and you know, certainly in the cloud and the big data space, you know, that's a challenge.
Regulators in the US are continue to look at that, and in Europe, so we'll see where that goes. Just on the funding piece, To do all this needs funding.
Yes.
AIB has funded Atlantic Bridge as one of your investors. Also, they funded Active Venture Capital in Buy Me. There's 43 billion was raised by startups in the first half of this year, over 10 billion than last year. So it's a huge investment, and Series A rounds are increasing. They're getting larger. So if 5 million is enough for your business plan, why raise 20?
So look, I think that's a rubber hit the road kind of question. You're absolutely right. A rounds of 5 are now, I would say, an A, a 10 is now a 20. The metrics for an A used to be, a couple of million in ARR. It's probably now 1.5. So investors are faced with going, and because of that pricing issue valuation, they're faced with going earlier, and going earlier means taking extra risk. I think from founders' perspective, I always say, make sure you have enough runway is the first thing, and it's always easier to raise capital when you don't need it than when you do need it, and obviously you got to balance that with dilution, right? So they're decisions for individual entrepreneurs to make that trade-off. I can't make that trade-off for them. But what I will say is when we're looking now at opportunities, we really do focus on the amount of capital the business needs, the runway, and the quality of the syndicate. And we're looking for that to be as strong as possible because of what I talked about earlier about bumps and some turbulence ahead. I mean, we've had just this market for the last 12 to 18 months, right? So, and we all know it doesn't keep going like that. So at some point there'll be some kind of self-correction. We don't know what that'll be, when it'll be. So we're just trying to continue to invest in great founders, great businesses that want to be global and want to be successful. And I would say make sure you're funded for 24 months. If it's at the really early stage, 12 to 24 months. And what we are seeing on the medtech side and on the medical side is kind of like super seed rounds, where they're raising almost a pre-seed, a seed, and an A. And that actually is making sense because it gets them through the regulatory. In that market, it's quite specific, but it actually is quite sensible. And I'm beginning to think in some of the tech markets that, to try and avoid that valley of, as we call it, the valley of death, which is the post-seed to get the A around, which this man came through clearly. But you said I went here, I went there, I went. You did everything, right? To avoid that if possible. So I would think in the current market, getting the capital round done. But there will be a price to be paid for it, as you said. And then if you do raise 20 and you only need 5, I would say you need to be really careful about not wasting. Making sure that whatever you put that money to, there's a return on it. To your point about the customers, that it goes into customer acquisition, long-term customer acquisition that are successful and stay with you. So, and then it ends up not being expensive capital. If that's
you found that actually.
And I think something's like in our experience, WeBe challenge is its ambition. So as Irish people, we might want 5 as a founder, but actually we'd find international investors, but actually why not take 20 and be more ambitious? Yeah. It was funny, like recently in our recent investors who exited, we always say we'd love to be a $1 billion euro company. And they're like, but in America, you'd be saying it's a $20 billion company. Why do you set your ambitions like that?
Why put a ceiling on it?
Why put a ceiling on it? Sometimes it's ambition, and there will be bumps along the road or expansion opportunities that you haven't thought of. Yeah. So I think having that viewpoint and having it there, but look, it's always the free cash flow kind of theory. If you've got too much cash in your business, are you going to be inefficient? So it's that balance, getting that balance.
And that's a great problem to have, though.
Yeah, it is. Yeah, exactly.
I call them rich man's problems.
Yeah. The grocery market is clearly a massive market, and if they're ever a market that benefit from significant investment and Buy Me and others have really turned what was a sleepy market into an exciting opportunity. So just that whole point about capital and ambition, Devon, what's your view on it?
Well, the grocery sector is incredibly fragile, actually. So, I mean, look, I decided to get into the grocery sector in 2014. When I looked at the fundamentals of the market, you had a £9 billion online grocery market. That's just Ireland, UK alone, out of a 256 billion total grocery spend. That 9 billion was losing 300 million a year. That was the aggregate losses of all the grocers trying to provide online services. So it's been a loss leader for 25 years. But when you looked at the long-term demand curve for consumer behavior, you had 3 growth channels for the foreseeable future. Number 1, online. Number 2, discount. Number 3, convenience. three of the hardest channels to make any money in, because one, online requires massive capex and it's margin dilutive because of the last mile. Two is discount, which is tight margins and really hard to get right, and there's really only two clear winners in that channel in Europe. And three, convenience, which is really expensive. You have to buy really high footfall areas. And so grocers have been leaning into these growth channels. And now what's happened with COVID is that you've seen pressure coming onto to the retailers to ramp up their capabilities. So they've had to inject a huge amount of capex, just buying vans, onboarding drivers, just to service capacity. Otherwise, they were going to come under quite a significant level of pressure from consumers. And now you've also seen a swath of startups kind of coming into this space, accessing cheap capital that's allowing them to disrupt traditional players. It's creating a huge amount of confusion and a real sense of unknown in the market. And I think the grocers are sitting there looking at that going, I wonder what this means for us. And the problem is that they don't move fast, whereas everything around them seems to be moving at a rapid pace. So I think that's created a huge level of interest and change in the market, which we're really excited to be a part of. I think we found ourselves in a rather unique position because we're one of the only platforms in the market now that is actually a champion of retail. We only work with retailers. We don't compete with them in any way, shape or form. And we sit on top of the existing infrastructure in a way that isn't done. And I think that's creating a unique dynamic for us in the market. But it's very early days. Like, people keep talking about online grocery like the race has already been won. It hasn't even begun yet. It's still such a small portion of the overall market. And we're going to see some really big disruption probably in the next 18 to 24 months.
So the upside is all ahead of us, really.
Absolutely, yeah. It's a huge opportunity. But
on the seed point in Ireland, like, do we have enough seed capital in Ireland to nurture this next generation of opportunities, next generation of entrepreneurs, those looking to raise capital of up to 2 million and more than 2 million?
Yeah, I think, we've got phenomenal numbers. You spoke about some of them. PE is up about 5x to 9 billion, which, by the way, I think is a good trend because it means, companies like Fenergo stay longer private with a view to ultimately maybe a public listing. So that's a great trend. But then, and overall, I think we've raised about 1 billion this year in the local market, which is all of, that's twice probably our run rate. There's a lot of money out there, but it is going into companies that are more established. And there's some big mega rounds in there as well, which you have to kind of take out of the numbers. So I would say, Don, we don't have enough seed. It's still difficult enough to put syndicates together. There's a couple of players and they work well together, and it's a bit like what Devon said, we kind of have to shake every tree. We get it, which is fantastic. Angels, we've got some fantastic angel investors in Ireland who are in the main entrepreneurs that are going again and know their sector really well, and will give that really important 100 grand check, but to what Devon said, also their name and their reputation. So that's really important. And the HBAN group and the IRIS syndicates, there's a few of them, and a lot of them actually are syndicates with med tech expertise or technology, whatever, software. And then obviously we VI, and we've some early stage seed funds, and we basically beg, borrow, and steal and put it all together. But it's a challenge. So I have a lot of sympathy for entrepreneurs where you're coming out at that seed stage where they don't really have anything except perhaps the idea. And that first, if we do not put that in, we won't have these companies in 5 to 8 years' time in the Irish market. So this is a very long-term business, and you can't stop investing, because if you do, the pipeline, as it'll just narrow, and we'll get to. So it's important that we get the right sectors. You asked a question about the sectors, that we're investing in the right sectors of the future, and that we have entrepreneurs in those sectors, and that we're backing them all through the cycle, that we're backing the Fenergos, but we're also doing the next Fenergo, the next guy to come up with an idea or girl. So that, but as I said, there is enough there to get going, but I'd like to see more.
And at the other end of the market, we've a lot of new investors coming into technology, hedge funds, pension funds, corporate investors. Is that putting any particular dynamic or impact on the market from a fundraising point? You're at the later stage end.
Yeah, I recently went through another PE kind of round. What we are seeing, what we found anyway, was compared to previous rounds we had done, it was more competitive. It was faster. Yeah. Like, it was actually a lot faster than what we had previously been through. And look, the prices are obviously more competitive. There's more money people to use. There's what are the good opportunities? They're all fighting for the same good opportunities. But for instance, when we went through, it was all remote. We never met them in person, which is very unique given the size of the check they were handing over. And they were fine with that. It was competition. It wasn't just COVID. It was the competition they were dealing with and the ability to close at that time frame. So definitely, you can see it's more competitive.
Are you seeing any impact on in terms of your deal flow and deals that you lead?
Well, you're seeing big players traditionally who would have been in the public markets enter now in the private markets and investing in companies like Fenergo where perhaps they wouldn't have previously. So bigger guys are going earlier, and so that obviously just all cascades down. So that's definitely having an impact on price, and they, as you say, have a different approach as well. So that's a relatively recent trend over the really last, I'd say, 18 months. But look, the underlying companies are growing. They're doing well. They're winning business. They're year on year growing, and so as Niall said, they're in demand because some of these funds have literally trillions under management.
A rising interest rate environment, any impact on valuations that might cascade from that?
I think on the PE side it will have an impact because a lot of these massive funds that I was talking about, typically they'll run DCFs and they'll run, very much based on discount rates. And of course, if inflation is going up and interest rates go up, the discount rate goes up and the returns come down, right? So the pricing models start to change. So that's where you see that impact straight away. The other concern I have on inflation, and particularly for companies like in our portfolio and Devon and Niall, wage inflation and talent and the competition both here in Ireland and in the US and globally. That's a huge challenge for us in businesses and just trying to manage that and keep people and attrition and churn. And we're already into the great resignation post-COVID, dealing with people who've said, listen, I want to do something different.
It's just reacting to it.
Yeah.
I mean, we would do periodic cycles of wages every 12 months, but actually that's not fast enough anymore. And you can't blame the cost of living. If people can't live, they can't afford or on a good wage, that's so difficult. And it's probably, when we meet as a C-suite in our company, it's probably the first topic we keep on talking about. How do we compete?
How do we retain?
How do we retain? And people aren't being greedy. The employees are not being greedy. It's the nature of the environment they're working within.
I think I think if anything, if COVID has taught us anything, it's how functional remote working can be. And I think we've been very lucky. We've been incredibly capital efficient, and a big part of that is the fact that we're half Irish, half Armenian. My co-founder is Armenian. We have 35 employees based in Yerevan. The cost difference for talent is just staggeringly different. We have 22 people in Ireland, we have 10 in the UK, and 35 in Armenia, across a variety of different departments: technology, engineering, analytics, operations. And I think what Irish companies particularly need to be more conscious of is how do you build a business that is able to scale internationally? Not necessarily that you're trading internationally, but actually that you're operating internationally, and that you're able to take advantage of those deltas in
you need
market.
different labour pools.
Exactly.
You can't be fishing the same pool. I know from a tech perspective, like developers, they don't want to go back to the office. I mean, they want to come back for maybe the collaboration, the whiteboards, but they don't want to be back for the normal meetings. But you do need pools in terms of talent pools everywhere. And it is a game changer.
If you weren't doing what you're doing today and you could lead any technology company, which company would it be and why? Devon, first for you.
This is always a really hard question because I don't think about anything else but what I'm doing at the moment. It's incredibly, it's an obsessive problem. What I've found is in my journey with BuyMe, I've become incredibly excited and interesting around infrastructure. Now, my background is energy, so maybe it's not that big of a surprise, but there's a couple of companies, particularly in Ireland, that I'm really excited to watch develop, and if I wasn't doing what I was doing, I'd love to go and work with those companies. It would be the likes of Previsio, led by Barry Lunn, developing the software and the capability to really facilitate level 5 automation within vehicles. I think that's going to be transformational for our industry in the grocery sector, but it is a long while off. But it's the work that the likes of Barry and his team at Previsio are doing. I'm really excited about that. I think the work that Bobby Healy's doing in Mana Air, I think is so exciting. I really think that's also going to be so impactful for a variety of different categories and different industries. And I would really encourage the Irish Aviation Authority to really support that and be a part of that journey. I think they're doing some really, really great stuff.
Elaine, I'm sure we'll exclude your portfolio companies because they're all your favourite, all your favourite children. So beyond,
It's a bit like that,
isn't it?
Yeah.
So ignoring your children.
Honestly, I was thinking about the question, and the answer is I'm actually so blessed that I have the opportunity to work with all of these entrepreneurs. You know, we've about 80 different companies in the portfolio. We've probably invested in 120, 130 since we set up Atlantic Bridge. And I did 15 years running 3 companies, and we took them public, and it was an absolutely phenomenal ride. And out of that, we built Atlantic Bridge, and I can't honestly think of, you know, I get to have the best in the sense that I get to work with lots of companies, and there's good days and there's bad days when you've got that diversity. But I do think, you know, as I think about the next cycle of change, and definitely. It's called many different things, ESG, impact. The things that I'm most proud of are the fact that, one, we're a diverse team. About 40% of the team are female, the investment team in AIB. 40% of our portfolio in the early stage are diverse, and we've about 12 different nationalities. So I think this is the way, you know, the business is changing. This is the way we have to conduct business now for the next cycle, I think. And then when I look at the companies in that climate impact space now, we're looking at everything through that lenses. Like, so even a company that's doing, we just invested in a company with Sequoia that's doing load balancing for apps all around the world. And today they were telling me, you know, if I'm on Airbnb, I'm just picking them as an example, it's not them, my app might be syncing back to Sydney. You know, that makes absolutely no sense from a planet point of view.
It makes no sense, and we're finding the developers now asking us.
Yeah.
What is your ESG strategy for your cloud infrastructure,
Yeah,
for your infrastructure?
Yeah.
When are we using load? When are we using load on clean power supplies?
Yeah.
So it's affecting everything.
So
in terms
all of that's being re-architectured, and so I want us, Atlantic Bridge, to be investing and enabling and bringing forward both those entrepreneurs, whether they're, hopefully a diverse base of entrepreneurs, giving people, you know, listening to Devin talking about getting that start and getting those rounds together. So I think it's really important that we've an early pool of capital as well to get those things going. But it's definitely going to be in those sectors now. You know, I feel very strongly that that's quite an important thing, and that's probably where I'm going to put most of my. I see that in itself. See that as a job in itself.
Time, energy, money. There. Yeah. Okay, Niall. If you weren't in Fenergo, where would you be?
Noah, it's an Irish audible company, audio company. It's fantastic. I was a subscriber. I discovered it on Dublin Airport. It was like they were sponsoring and a subscriber, and it's absolutely fantastic. I'm an Audible addict, and then Noah just takes that to a different level. And I know the team. I just made contact to tell them how good the product was. Right. It's a small team, but I think it's got a fantastic potential. And then I live in Cork. I'm from Cork, so I'll plump at teamwork. I think collaboration software is going to be big, and I think Meta, you're talking about Meta, I think augmented reality and collaboration in a business sense. Yeah.
But just think about Zoom in a Meta environment. I don't want it to be, I'm not saying, but in an AR environment.
What could you do?
It'll be, you know, maybe it's more improved. Maybe it's, you know, I have a better connection with you. But it's all these disparate. There's software, there's hardware, there's infrastructure.
But isn't it so? I mean, so much of this is about timing and the infrastructure being required. I mean, our business couldn't exist without smartphones, Google Maps, all this infrastructure that we sit on top of facilitates the service of what we provide. And you look at all of this. This is all just a timing exercise, and so many people are pulling it all together. And then you have a total black swan event like COVID, which educates the world on remote working and what that should be or could be. And then you have all of this kind of happening at the end. It's really interesting when we look back in 10 years' time and say how COVID had an impact on the direction of travel for us from here on out. I think it's going to be fascinating.
Great. Well, on that note, I'd like to thank you for all your collaboration today, your input, your honesty of views. It's been great. I think everyone, I hope you've enjoyed this session. I think some of the summary points include, I think that more work is needed on seed in Ireland. There's a booming general environment for capital, especially at the later stages. We have no shortages of good opportunities in the Irish technology market. I think some of the companies mentioned today by the guys are, you know, good example of where it's going in the future. So I really hope you've enjoyed the session today, and thank you from all at AIB and Goodbody. Thank you.